Hello, Face. Face is a place where I became an ace. Just speaking for myself. Hi, Forex Gal, how are you? So I tested it out, my theory. Surround yourself with traders better than you, and you'll rise to their level. So that could happen to you too, guys. Just hanging out and going in the chat room and looking at all the work from the team. Webinar online. Thank you very much. I wonder who that mystery lady is. Any guesses, guys? So it's not a theory, because I've seen, theories are something that you don't see manifest in reality. So it's not a theory. It's a fact. Okay, so, give the trial a shot. Like I've said before, if you don't like it after 10 days and you really want the $1 back, I'll mail it to you. Postage too. You pretend it's Nick. Maybe you ought to, Alex, join eHarmony, okay? When you're not trading. Enter a different market. All right, let's get to the markets here, guys and ladies. So the turnaround Tuesday suggestion was short Swiss. It made the turn in Europe, I believe, and we were here yesterday. So we had our first leg here, and this is exactly 61.8 back. So taking the shot up here, risking a little bit over the highs, because I don't want to never put your stops 1 pip over a swing high or swing low, in case it's just a stop hunt. Stop hunts, I would say, on Swiss are maybe 15 pips, 20, where they'll take out a swing high, swing low, and if it's real, it's going to continue. But if it's just the algo shopping liquidity, it won't have follow through. So I'm thinking here, this is about 70 pips, 42 back, 61.8, 1.618. It's going to take it to here around par. I think it's possible. We still plenty of longs to take out. I'm not calling this a major top. We could just have one big ABC and then blow to new highs as we get closer to the Fed meeting in December. The S&Ps starting to diverge here. This might be a 1, 2, 3. I've seen some work that says it could trade, 2680 and then recover. To me, this is an I don't know, because I thought a weaker dollar would give the market a little bit more comfort and support. And so far, it doesn't seem like it matters. I'm interested in taking a look at the beach ball. I'm coming to believe that it's got a mission. And I do believe that its mission is to take out the buy stops above the high up here. And Krug showed a real nice pattern. So we could go up towards, 115, and that might be the shorting opportunity. I just don't see how the market falls apart until the end peaks. So something else that I've noticed, gold, you could get a rally in the gold. I'm still looking for lower levels. I'm not ready to get long, even though I'm looking for the dollar to come in a little bit. But it wouldn't be unreasonable. This is the daily for us to rally back to 1212. I mean, this was a pretty good break, and this was the midterms. So I think we got up to where? Well, it was in the 40s, but just this 38, $40. Why can't we rally 20 from here? That could be actually 12, 18 or so. So I think gold, just like the dollar and silver, are going to have some type of retracement move. Real nice divergence in silver here. So we'll see. Someone told me they were buying at 1390. That was a good number. I also want to remind people that, you know, you're in here looking for ideas, but where you trade makes a difference, right? So you may want to consider this. The reimbursement program if you're outside the US and a rebate program if you're here. Okay, so, and to do that, you get a hold of the Forest Park FX. Trent's a great guy. Justin's a great guy. Look, they know all these brokers. Look at all, you know, my belief is, what's your most precious currency? Anyone have an answer for me? Is it the dollar? To most people, that's their most precious currency. What's yours? Ziggy, Windsor, guys from FX Street. Ziggy's got it. It's time, right? Money comes and goes. Time is gone forever. So look at all the time these guys can save you. They've done all the due diligence. Okay, so give Trent and Justin a call and tell them you came from Pace, and they're going to be of great service to you. So we'll see how the day unfolds. I'm still thinking that, you know, we're in a correction in the dollar, and that's, you know, the one thing I see. And, you know, I am a believer that you know, I did an interview with opportunistic trader Larry Benedict's company, new company, and he was written about by Jack Schwager and Market Wizards too. And, you know, I was talking to them and saying that, you know, patience is the most important thing that we could ever learn, is to, you know, wait for setups. And, you know, I got a Skype today, someone had FOMO. I get FOMO, but learn the discipline. I talked about how great it is to do intelligence gathering with my team here at ForexAnalytix. He asked me, you know, who's doing better nowadays, the guys with Elliott or Harmonics or Candlestick? And I said, you know, it's really not the method, it's the practitioner. So there's 1,000 Elliotticians, but only one Grega. Okay, lots of people do harmonics, but not like Andre. And you guys know the rest of the story. So become part of our trading family. You know, surround yourself with traders that are better, and you'll rise to their level like I did, being part of ForexAnalytix and being part of the face every day, and hearing Blake and being able to go to, if I have an idea, being able to go to my dashboard. So don't drive around in the markets without a dashboard. You wouldn't do it in your car. Don't do it in the market. So look forward to you becoming a subscriber and part of our family. And with that being said, how's your back, Blake?
My back is fine. Thanks for asking.
You didn't have to lift, you know, move all that stuff.
Oh no.
Oh, thank God.
No, I did.
Okay.
It was a spur of the moment type of thing. Well, hey, you know, good morning, Coach, and good morning, everybody listening in. You know, we have actually today a really, really busy day. You know, the UK Parliament meets here in just a few, well, in about an hour, less than an hour, and the cable is on everybody's radar. And you know, there's going to be a lot of volatility in the next few hours. So if you're trading the cable, just be really careful. I managed to buy it at 129 while we were in the chat room this morning, and I sold it at 129.50. So I made a quick 50 pips literally within, you know, this move within, you know, 30 minutes or so. And for me, that was great because I took it off the table, and now I've got, in my mind, I've got 50 pips to play with. So, because there's going to be so much volatility, I, you know, want to make sure that I'm, you know, targeting my entries at this stage in the game. And so I'm going to give you guys a little bit of my battle plan on what the way I'm looking at the cable, at least right now. So
what a way to go into battle, risking profits rather than principal.
right. Well, and
I love it.
you have to keep in mind that let me explain to you what I did yesterday. So I actually bought it right almost 10 pips away from where it's at right now. I bought it at 129.60. I think it was like 64 yesterday. It ran up to the 618. So if you have ForexAnalytix, you knew this. So if you look at the cable basic technical analysis and you go to yesterday hourly charts, right? So we were running up towards the, whoops, that's the wrong chart. Let me get over to the hourly that you can actually read. Shoot, here. It's right here. Okay. So as we were coming up towards the 618, yesterday's analysis was, the pound dollar surging higher as it looks like Theresa May has a deal, but now has to go through her cabinet or parliament. We are stalling at the 50% retracement, but earlier we talked about could target the 618 retracement at 130.43. So when we got to 130.43, which, if you take a look at yesterday, we got right up here to the 618. I told, the guys in the chat room, listen, I'm going to take a little bit off, and I did manage to take some of it off, but it slammed all the way back down as it looked like it wasn't going to get support from a lot of members, and a lot of people are, there's a lot of words being thrown around inter parliament, especially like from a known contest vote to it's a botched deal. It's not, the Brexit deal they're looking for, yada, yada, yada. Anyway, so I ended up getting out of the majority of it for flat yesterday. I think I made a couple pips because by the time I got out of it, it was like 70 something, after this little pop here, just an early Asian trade. Then it popped higher because 4 other members of our parliaments showed support. So I was at kids practice and it popped higher, and I'm like, you know what, I'm just going to leave it alone until tomorrow morning. We were down at 129, sub 129. I picked it up and then I spun out of it already. So I didn't want to leave money on the table like I did yesterday. Now the question is, what do you do from here? And if you look at the cable where we're at right now, we're at the we stalled at the 618 retracement. So bottom line, this is really, you're going to know from a price action standpoint, you're going to know if a deal has been struck if we break these highs. So that's really all I need to say about that. If a deal gets done in principle, and there's going to be some debating, but if the DUP goes along and a deal does get done, we're going to surge past 130.50, and if we get past this resistance, this is where I become really bullish on the cable from a price action standpoint. It's going to start squeezing people. It's going to be, it's got to coincide with all right, the deal has gotten through Parliament at this point. Now it's going to be the nitpicking between the EU and the UK, but in essence, a framework deal has been done. So we'll know. It's pretty easy if a deal gets done. The question is, what if a deal doesn't get done? And which things can get messy. I get analysis from this gentleman in the UK through our firm, who has great. He's got great analysts that divvy up all the the ups and downs of Brexit, and the fact of the matter is, if this doesn't get through Parliament today, the chances of a no confidence vote for Theresa May is high, and then the risk of a new leader and a messy outcome. You're talking, and Amanda corrected me. She says the DUP are not at the cabinet meeting. They haven't seen the text, and probably being until tomorrow. Thank you, Amanda. But if it can't even get through her cabinet meeting, right? There's a good chance that things could really fall apart. And then, then you're talking about a real loss in, because we're running on a really tight timeline now regarding Brexit. So if things don't go well today, things could quite possibly spiral into something a lot worse. And I think that's what the market's predominantly worried about. So you have to look at like these lows as being extremely important. So the lows coming here at 128, 128 and a quarter, which by the way is I think it's just above the 88% retracement, or it's above the 78% retracement. So if we take out these lows here, I would think that pretty much all hope is lost. And then you have to realize that it's not only just a pound story, it's a euro story. So that means that if the cable falls and it breaks, it's going to take the euro down with it. Because if a Brexit deal doesn't get done, it's not going to only impact the UK, it's going to heavily impact the euro. So what I'm trying to tell you is, if the cable really starts to break lower today, this could be a very big risk to any dollar positions that you have. You could see the euro really break down, because keep in mind that the euro, and we've been talking about this for the last couple of days. We broke 130, or excuse me, 113. Okay, we bounced, we failed at 113. Yes, we got to 113.20, but this is basically a failure of the breakdown point. Okay, you may go, oh well, we popped our head above that. Yeah, I get that, but that was just Asian market squeeze some late shorts kind of crap. That really it's failing at 113. Now we are at 113 right now. The risk reward is to short the euro at this moment, but I'm not going to do that. I'm not going to do that until I get a cue from the cable. Really. All right. Now let's not forget that both the EU and people in the UK know that a Brexit deal needs to get done, and it needs to get done in a very fast, timely fashion from here. They may, nitpick and banter and argue the fine points, but everybody is firmly aware that something needs to get done. And if something doesn't get done here, whether it's today or in the coming days, we are at risk of a full-on, crisis in not only the UK but in the Eurozone. And I think everyone on the UK side is keenly aware of that. Now, I didn't believe in Brexit. I didn't believe in it. I didn't believe in it so much I took a vacation and I went to Kauai on the Brexit vote day. I'm like, there's no way this is going to happen. I landed in Kauai, Hawaii, to the cable dropping, 1,200 pips or whatever it dropped. I couldn't believe it. So you can't you can't sit back and think that that things are going to get done today, because there's a very significant risk that that things just fall apart at the seams today as well. But it's going to be very important, and I think the first step is getting past today, and the pound will let you know. I mean, like I said, this is the range. We are very well aware now what the range is: 130.50, 128 and a quarter. Above or below that, it's gonna tell you if the proverbial poop is about ready to hit the fan or not. So I think if you're trading the dollar in any way, shape, or form, okay, you have to be watching the cable today, no matter what. Like I said, the risk to reward right now is to short the euro. That's the risk reward. I'm not going to do it. I should be doing it, and if there wasn't such a key, and Amanda can clear this up. It is a vote in her cabinet, right? Her parliament meeting today, correct? I mean, if she can't even get past that hurdle, then we have a problem. All right. And that's where the market is. That's why the market's been trading so heavy in the cable. I don't think a lot of people have confidence that she can even get that far. And you know, like I was reading this earlier. Oh my gosh. You know, I was reading some analysis about, you know, who would be the next, you know, who would be the next, you know, and Amanda says, yeah, she needs to have her cabinet agree to put it to Parliament. And there's so many in her cabinet that disagree with her approach at this point. So, but I was reading on, you know, like all the different, you know, oh wow, UK Labour Party likely to vote against Brexit deal, and that comes from an official. So, you know, it's messy, and again, I think we need to take cues from everything you see here. Now, before I go and I pass things over to my colleagues Steve and Stelios this morning here in the next few minutes, we do have CPI coming up. I have to bring this to your attention. So if you haven't seen this, let's just talk about it. This is the daily sentiment index from overnight. This was released overnight. We subscribe to this as a company. It's not cheap, you know, but we do it. And if it's and I bring it to the attention, or our team, not just me, but our team brings it to the attention of our you know, ForexAnalytix, you know, team. I say team or chat room because everybody in there, we're a team. There's like 100 of us that are part of our ForexAnalytix private community. We talk all day long. There's 100 plus, you know, that are in our chat room right now.
That's like a company, Marine? 100?
No, you can say hi. This is our chat room, and we have right now 100 of us, 105 of us in here right now. So you guys are on Jumbotron.
Wow.
But
I'm a lot of action junkies in one spot, man.
There are, you know, and I don't share this every day because there's not every day that we're at extremes, but notice the extremes here. Sentiment on the euro is at 5. It was at 6 yesterday. That is extreme bearish sentiment in the euro. And the euro is up at this moment. The Swiss franc is at 7. The cable 13. Yen is at 13. Dollar index is at 91. That's a very high bullish sentiment reading. And this is a potentially contrarian indicator too. When things are so extreme in one direction or the other, anything below 20 or above 80 starts to get my attention. When we're below 10 or above 90, that really gets my attention. So you see Nat Gas registered at 96 yesterday. Have you seen Nat Gas today? Have you seen this? Nat Gas is going to reverse at some point today, and that might have been it. That might have been the capitulation type of move, and I don't like to use that term often in Nat Gas. But if Nat Gas, wow, you know, closed the day at 4, this is the biggest one-day gain we've seen in, like, you know, forever, 20 some odd years or something. But if Nat Gas, you know, closes the day at 4, you know it's over, and in my opinion. And it registered at a 96. So it's still, even though it was at a 96, it was still up at this point in time from yesterday's close. We're still up another 13, and we were up nearly 20%. So you can see the readings, even though extreme yesterday, still produced an up move today. So this doesn't mean that, oh, the euro's at 5, it can't go down. No, the euro by the end of the day, we could be trading at 111.50, especially if this whole, you know, cabinet meeting falls apart. But the readings are so extreme that you got to be very, very careful at this point, and the risk of a reversal now is starting to increase. Here, let me get rid of it.
You need other reasons besides the DSI.
Yeah, DSI is just one component of all the things that we look at. But I'm pointing it out because we are at extremes, and we've been at extremes for the last couple of days. So does that mean you want to buy the euro right now? No, but it is a warning. It is a warning about being short the euro dollar. That does.
I'm not impressed with the first rejection off 113, Blake. How about you?
No, I mean, we only pulled back 50% of this move. So, you know,
right. That's what
I mean, I agree. Now, I'm more interested, honestly, what the better setup for me today is that Prime Minister May moves past today and gets through her parliament meeting, and it puts the pound above 130.50. That's more interesting to me, because that means the cable's above 130.50, the euro's trading above 113.20, and then what we end up having is something bigger. Is we have this euro dollar breakdown. We hit 127% extension of this last move. We almost hit the 618 divergent relative strength, and now we reverse. That would set up a much bigger reversal for the euro dollar. That means in my opinion, we're going to probably be trading close to 116 by year end versus trading down at 111. But I hate to say this, I think it all really depends on what transpires today. It really is, and that's how big of a deal this is. And I'm glad that, you know, our audience today is a little bit bigger than normal. That means more of you guys are listening in. We cover, you know, the majors every day, and you know, I have such a great team between you know, Steve and Stelios that are always here, Grega, who was here 2 days ago going over Elliott Wave, you know, counts, and then, you know, Andre when he comes on for harmonics, and obviously you're here, and then we have such a great team like Amanda, who's always in the chat room. So you know, and Polly, obviously, who's always in the chat room and doing the morning analysis. We have such a great team that I'm glad you guys are all here to listen to them as they're going to take over here in a few minutes as we go through our CPI. So guys and gals, if you're not part of our community, it's only $1. It's just $1 to try it out for 10 days. Jump in our chat room, see what you think. Come hang out with us. And with that being said, I'm going to pass it over to my colleagues, because I got to bolt. I got to get out of here for New Zealand CPI. By the way, the dollar yen is in a very tight triangle right now. So I think we're going to be looking for a breakout soon. So just a little heads up. All right.
Great analysis,
Steve,
Blake.
thank you, Steve. Stelios, are you guys here?
Hello.
Good morning, guys. How you doing?
Hi.
Good morning.
Very good. How are you?
Good morning. Good. Just you know, obviously it's going to be in about half an hour's time. It's going to be, things are going to get hot and heavy. So it's Stelios, I'm sure you have a lot to say about it. I'm sure you do too, Steve. And Steve, I know Steve he's getting a little bit bullish on crude down here. So I'm sure you guys all should listen to his analysis here on crude. All right, you guys have a great one. Thank you.
Good hunting.
Thank you, Blake.
Thanks,
Bye.
guys.
Steve, one thing I would like to say before the numbers and after the numbers, I do have something to say about the UK, obviously. The thing I want to say before is that Italy, they sent their, well, I want to say revised budget, but really it wasn't revised at all to the EU, where they didn't change the growth or the deficit targets, but they did in the projections, they did show that they project their debt to fall, which is interesting because they're going for a higher budget deficit than the EU wanted, but still they want their debt to fall, and apparently they're saying that there's going to be some privatizations, and that's going to fund the debt.
What's the problem about that? And the US reports 750 roughly billion dollars of deficit for the fiscal year that passed, but they had to borrow 1.2 trillion to cover that same fiscal year. So sure, yeah, absolutely. I mean, numbers are just numbers nowadays. You can put whatever you like, right?
Yeah. So that's that was what they said. Now let's see what's going to happen now from the other side. But really, that's what they're going for, and they're not budging. They're not budging an inch. That's apparently so. It's going to be interesting to see what happens. And as I've said before, I think this Italy story is not going to go away. I think there's the size of the country is big enough that it's going to make it a big deal, I think, in the near future. Anyway, we'll talk about
we have some CPI data, with US CPI data within a few seconds. We are expecting 2.2 Stelio year on year, if I remember right.
Well, core CPI year on year 2.2, CPI 2.5. So
2.5, yeah. It's that symmetrical target, yeah, right.
Yes.
Okay, yeah. So let's see what we get from CPI and what kind of a reaction, and then we have a lot of things to talk
core
about.
CPI 2.1, CPI 2.5.
Okay.
So I think it's
more or less as expected. Yeah. So CPI remains theoretically speaking above target. As you said, core is a little bit weaker, but with the oil prices coming down, we should expect that to start rising as well. 2.5, the nominal CPI year over year. So it's 95% what the market was expecting. So we should not see much of a follow through to the initial reaction. And as we see, things have been more or less
on that.
Yeah,
okay, but I really don't think we should read much about that. What I can tell you for sure is that the previous reading in the CPI year over year was 2.3%. We're now at 2.5%. I remind you that theoretically speaking, we have central banks that are striving and are looking for, according to their targets, for price stability. Now, mathematically speaking, for whoever understands basic math, price stability means zero inflation. Yeah, because how can you have something stable if it's rising? I mean, it's simple word interpretation of maths. But we slowly and steadily made stability be something like close to 2%. And now we've gone to the part that, okay, let's keep it symmetrical around 2%. And since, during the past few years, we had below 2%, okay, what the hell, we can have a little bit above 2% for like whoever knows how long. And, it's still fine and okay. So now, we have a lot of things to talk about. Yesterday, I actually, for those of you that are members of ForexAnalytix, you know that I actually opened the pattern in play down here at $55. The reason is very simple. Yesterday, actually, when we were at minus 2%, I actually wrote in the chat room that, listen, the best case scenario, in my opinion, is if today we get a huge drop, like a huge capitulation kind of move that's going to, get everybody out of the market. I mean, everybody that's long, knock them out of the market. To be honest, when I said that at minus 2%, I really didn't expect that crude would actually reach almost like minus 7%. But I was hoping for it.
I saw it cross the Reuters wire, that comment.
Yeah. So but I was hoping for it because usually, you also read in theory, when you read about candlesticks, you read in theory that a very long candle can either be a continuation candle or a reversal candle. And initially you think like, why the hell is that? I mean, usually that means trend acceleration. Yeah, but it depends on where you find that candle, right? When that's like the 13th consecutive day lower, and then you have like a huge move like the one we got yesterday, like crude getting demolished on all levels, and with crude DSI already being the day before at 7. And I wrote to everybody actually that, I would like to see like a huge candle lower and the DSI printing 5 or below. And, near the end of the day, I opened the pip and I said that, listen, I expect that today the DSI is going to be maximum at 5, if not lower. And I believe that we're going to see some capitulation down here. And this is a lovely confluence of supports, as you can see. It's a 61.8 and previous support resistance area. So that's when I actually opened the pattern in play at 55, and at least for a healthy rebound. And it's I have no complaint because like within a few hours it's already like 2.7% higher. So we bottom picked this one for the time being, and I've already moved the risk to break even because when you dip your toes in something like that, you need to be fully aware that you're going against the trend. There is no question about it, right? I was long crude here, half a position. I had built already like 2 quarters of a position. And as I said, I had trailed my stop below that low. So yesterday I got stopped out at 59.30 for $1.1 of loss, but only on half a position. And yesterday I started scaling in, and I managed to build actually 3 quarters of a position. People that are in the chat room, I was giving them always, my entry points, etc. With the average being a little bit below where we currently are. But when we actually hit on the same day that 65, that 55, sorry, 37, I thought that that's it. That's why I opened the pattern and play. That I thought that's it. This has to be some type of a short-term capitulation, and the DSI came out at actually 4. During the past several years, we only had 2 readings of a DSI of 4 so far. So it's an extremely rare bearish reading, and obviously, after hitting like almost 30% lower, and such a nice support, and as I said, this kind of candlestick shows to me more of a capitulation. I think that the risk reward was extremely appealing. But as I said, whenever you're trading against a trend, you need to be willing that you might need a couple of tries before you get it right. That's why you should be building smaller positions, and you should be trailing your stop loss immediately to break even, because if you actually caught the low, great, amazing. But if you didn't, you don't want, for example, if I hadn't trailed my stop loss at break even, I wouldn't want to see another like 8% move go against me, right? Just because I thought that these confluence of supports might work. So you need to be fully aware when you're trading against a trend that you have to follow completely different set of rules. So whoever followed that pattern play yesterday, they're more than 2.5% in the money, and now you can do whatever you think with it. I mean, you can just keep it at break even. And personally, I believe that there is a decent chance that we're going to retest these previous support areas resistance. So I do want to hold this position and see if it can get me higher. But I would totally understand if somebody wanted to book some here. Now, having to do with natural gas, we don't often see it, but the last time we did, because somebody asked of it, this is exactly what we drew back then. I don't know if you remember, Coach. Somebody had asked for natural gas, and on the fly, I said, listen, things are very simple here. You have a horizontal support area that's extremely strong, and you have a descending trend line resistance. So we were back then in that triangle, and I said, listen, once you break the triangle, which looks like it wants to break to the upside, we will at least retest this this trend line resistance. Now, if you break above that, you should expect a move that's going to be at least equivalent to the first move that we saw up there, perhaps up towards 61.8. I haven't touched anything in the drawing since then. Obviously, I would have never assumed that the move could have been like so vertical like it currently is. So in my opinion, this kind of a candlestick, perhaps we're going to see the same kind of capitulation candlestick in natural gas with 1 day of delay in the opposite direction than we got with crude. So, we might get more or less the same type of event happening in these two markets in the opposite, direction with just 1 day of delay. So already, as you see, this monstrous candle has retraced half of it, and this move higher is more than parabolic. It's like almost 90 degrees kind of move, and these kind of moves, even geometrically speaking, are completely unsustainable. Okay, so obviously buying up here makes zero sense to me. Probably having faded, the extreme of the move would have been a good idea, as I'm doing now with crude. So I think that the situation is quite obvious here, and we can move on to another market. Now, the other market is what? It's the dollar. Obviously, the dollar. I'm not going to speak about the cable because Blake did that extensively, and the pound pairs. Obviously, the pound is going to be driven today purely by political news and whatever happens, and who knows, because they're going to take several hours. Within that period of time, we might be getting rumors moving the market of what's going to happen. So personally, I would just stay the hell away from cable today. But that's my personal approach to it. I know that some people like to trade the news. Some people like to trade extremes. But obviously, the cable is also going to affect what's happening here with the dollar. And the dollar is at quite a sensitive area here because there are two possibilities. One, that this was like an ascending triangle from which we broke higher. We might be retesting now the 97 area, which is breakout point. On the other hand, you can see this if you draw the parallel as a channel, in which case we found temporarily a resistance at these channels resistance. Personally, I said that this 97.85 is a nice confluence of resistances. We almost made it there, but we didn't the day before yesterday. And I also like the 99 area because it's another nice confluence of resistance. So obviously, jumping the gun and looking for lower levels just because we had like a very negative day yesterday that completely erased the previous candlestick. I think it's too early. Personally, for me to be looking lower in the dollar, I would want to see the dollar break once again below the 96.20 level, in which case, at the same time, it would probably be breaking below this ascending trend line support. Until that happens, I think that you need to respect the potential for more upside. Now, having to do with the euro, yes, euro has an extreme DSI as well. Yesterday, I actually at the lows, the day before yesterday, I think it was actually at the lows, I put an intraday analysis saying that we're testing confluence of supports. Actually, I showed that on the 4-hour chart, and we actually held that. We're now retesting 113, as Blake said. Obviously, it can move lower from here. My next target would be a little bit below 110. I think that only a move above 114.50 would change, the outlook for the euro. So personally, even if it breaks above 113, I would still not be convinced that it's done moving lower. I think 114.50 is quite important because then we need to break that to actually, at least in the short term, develop a higher high, which we haven't done for some time now. Now, having to do with the rest of the metals, because I think some of those are at quite interesting junctures as well. First of all, it's gold. Gold is consolidating, as you see, at this ascending channels support. Yesterday it was clearly a consolidation day. I mean, we had a spinning top that's an indecision candle. So far today we have another spinning top, which is actually so far an inside spinning top on an inside day on another spinning top. So second day of indecision so far. Usually after strong moves, in this case we had like a decently strong move lower. When you see a few indecision candles, that's not good news because it usually points to continuation of the previous trend, in which case it means that if we actually fail to rebound higher, like as soon as possible, this is likely just a short-term pause before another leg to the downside. And definitely silver would point more or less in the same direction because silver has already broken below this triangle. Triangles tend to break in the direction of the previous move and tend to run a little bit longer. And so far today has retested, even probed a little bit below the previous low. Of course, somebody can say, okay, what if a double bottom develops? Yeah, sure, there are 1,000 what ifs in a market, but the question is, what are the chances of, let's say, a continuation in comparison to a double bottom forming here? Obviously, the chances are overwhelmingly towards a continuation, right? That's always the basis. I mean, even if you read like any basic book of technical analysis, the first thing the vast majority of the books tell you is that you need to respect the trend and always acknowledge that trend trading is and breakout trading, which breakout trading and trend trading is breakout trading is part aspect of trend trading, right? Because usually you are waiting for breakouts in the direction of the trend to actually trade breakouts. So, usually, not usually, in every occasion, you'll see that all the books are actually advocating for such kind of trading because statistically speaking, it's more profitable. So, that's to answer what are the chances of forming a double
Great
bottom here.
education, buddy. Great education.
So the chances are low, right? I mean, you can always have wishful thinking, and yes, on occasion it's going to happen, but the chances that we're going to continue lower from here are, as I said, overwhelmingly high, and especially if gold fails from that support level that we just, showed, I think that there is nothing that's going to be holding silver as well. At the same time,
Steve, if things aren't working, once in a while, when I'm real desperate, I'll try the cursor technique. And
yeah, I know. Move your cursor.
Show everyone the cursor technique if they're long silver, how you would use it.
Yeah, I remember.
I mean, I gave you that secret for free. I usually charge $1,900.
You left.
Ready?
You left click
1,
here
2, 3.
and drag higher. Right?
Yeah, go. 1, 2, 3.
Higher.
Go. You have to drag it there. All right, buddy. Yeah. Some people have tried magnets. That doesn't work.
Yeah. So at the same time, we're seeing signs that another metal's rebound might be failing here, and that's platinum, right? Because platinum was well behaved, ascending within a channel. Obviously, after such a huge, you can see if I zoom out, you can see we're talking about like a huge downtrend here, right? There is absolutely no question. This has been a huge downtrend, and obviously nothing moves in a straight line. But as far as I'm concerned, this move so far has all the indications and all the characteristics you would expect from a corrective move, right? There is nothing impulsive to this so far. And the channel seems to be failing here. So at the same time that gold is striving to hold on the last, technical support, silver is at the precipice. It has already broken down from a triangle and the precipice of breaking down to lower lows. Platinum seems to be also breaking the corrective channel lower. So I think that metals look at a very, very, like being at a very, very rough spot. Of course, palladium is still doing its own thing, right? It remains extremely strong. This looks like being another triangle or whatever. We're going to see this, if this is distribution or whatever. I think that we, in platinum, we might need to see some type of a capitulation kind of move to the upside, to get everybody bullish. Perhaps we will need to see something like the move we saw in natural gas, like another thrust higher, like a huge candle, and then all the bullish interest evaporating in the short term, everybody taking profits, and then finally seeing a deeper correction lower. Now, copper on the other hand, I haven't mentioned it in some days because it's still like chopping around within this descending channel. Obviously, it still has a chance of pressuring the upside and pushing towards 295 before lower. It can even fail from here, or this can be a larger triangle. So initially, we treated this as one formation, and now we're treating this as another formation. But there is always the chance that instead of having like two formations here, in essence, what we have is a single formation, right? Something like that. This is also like a chance. Something like that. So, we need to see how this is going to work out. Definitely not something that, is worth trading at the moment. Now, if you want to trade, for example, this potential contracting range, sure, you can buy it here. You can put a stop loss below the previous low at 260 something, and hope that we're going to get at least another retest of this trend line. That can happen as well, right? But the more we fail to push higher, the higher the chances that eventually we're just going to break below there for one more leg lower. Because anyhow, even if we rebounded higher, the plan was that this would eventually produce one more leg to the downside. So, we might be dealing with a single formation, and the plan is still that we might see a move towards 245 eventually. This trend line, I think it's quite a reliable trend line. Why? Because it has already been tested by the market 5 times. Anything above 2 makes, from as a perspective from rules, it makes a trend line valid, because obviously, 2 points of 2 points can create a single trend line. A third retest gives more credibility to the trend line. But when you start getting like 4, 5, 6 retests, obviously that means that more and more people are monitoring at this trend line. More and more people are using that trend line to either play breakout tactics or place their stops if they want to actually trade the range or the formation in this case. So which means that the higher the chances that when this formation finally breaks out, it's going to produce a very healthy follow-through, a very healthy continuation. So I think that a loss of this trend line is going to be a major step for us to see the next move towards 245, and I think that it has a very decent chance of actually happening. Now, having to do with stocks, I usually speak quite early in the webinar about them, but in all honesty, there's nothing major that has happened the last few days. I already have the position that I started accumulating here being on the short side, but I'm still not convinced that we're moving lower from there. Obviously, that was a major retest there, and Blake very accurately had chosen that day to make that his chart of the day, as we do every day. If you go to ForexAnalytix and to blog, this is free for all actually. Every day you'll find the chart of the day post. It's like a short post that shows what Blake thinks is the chart of the day every single day, and he has gotten the vast majority of them very, very right. Not a surprise if you know how good of a trader Blake is. And obviously the retest of the 61.8 created a failure. Now, is this failure from here going to take us straight to new lows or retest the lows? I'm really not sure. I still can't rule out another push higher, and I'm hoping for it actually before like a bigger move lower. So I've already got myself built some position here. I would want to see a move higher and the market starting getting more bullish. This will give me the ability to accumulate even a bigger position. But as I said, it can fail at any given point, because I really believe that the technical damage has already been done. And even if we eventually move to new highs, I think that the market is not ready to do that yet. So there is going to be definitely an increase of volatility. And personally, I've said some months ago, I believe that since we saw this move back here, I do strongly believe that volatility is here to stay until we get the next crash. So personally, I believe that we're not going to see again until the next crash and the next recovery. We're not going to see again the conditions that we had some of the previous years, with volatility being near zero, volumes being near zero for many, many consecutive days and weeks and months on occasion, and a slow drift higher in stocks. I believe that we've already entered the last phase of this bull market, and this is still going to be my opinion, even if we manage to push to new highs. Actually, another push to new highs is going to get me really, really interested in being short in like big positions, because I do believe that these are the last breaths of a dying bull market. This has already been designated as the longest bull market in the history so far, and its strength is definitely not based on fundamentals, right? There is no question about it.
Steve, I heard an interesting analysis that the count in NASDAQ was fulfilled from the 09 lows, and that NASDAQ, it's over, but the S&Ps, some people are still talking, new highs, 3,200, that's still possible, but the NASDAQ has peaked.
That might be the case, but 3,200 with the Nasdaq having peaked, coach. I'd
to
say
see,
that
huh?
I'd say that the person that said that is not very good at math, and it's easy for me to say it because you didn't put a name on it, so I'm not insulting somebody personally that I know, but I can tell you one thing for sure.
And I forgot
The
his name,
Nasdaq,
so we're not
the
in trouble at
Nasdaq,
all.
the Nasdaq failing from here. So what that person implies, in essence, from the current levels that we currently hold, right? That person implies that the Nasdaq is going to be moving lower, or at least let's assume the best case
Like
scenario.
maybe retest the highs.
Yeah, whatever.
Like
And the S&P managing to climb higher another 20 plus percentage points. Nah.
Well, how about just a marginal new high? You know, like
yeah, that can happen.
20.
Absolutely,
Yeah.
that can happen. A marginal new high, yeah, sure, it can
Okay.
happen. Or even
Who knows anyway?
3,000 or whatever.
I'm gonna keep the sound down on CNBC. They confuse me. I'm just gonna listen to you, buddy.
So yeah, that's what I think about. I think that you should be careful with stocks. If I had to do something here as we stand, I wouldn't know what to do. I've already started accumulating, as I said, a short position, but I wouldn't know what to do because we might rebound higher once again. As I said, I'm actually hoping for that, right? I'm actually hoping for that because I think that a lot of people will believe that this was simply an ABC correction here and we headed straight higher. But personally, I believe that this might at least prove to be a fractal of this, in which case we move higher, we found resistance, we moved lower, we then posted a new high. We might do something like that here. Then we moved lower again, almost tested the lows, and then started climbing higher in a manner that definitely doesn't look that impulsive. That didn't look that impulsive to me. Yes, we did keep climbing higher, but just compare the way we had been doing it until January, which
January,
was exactly, and the way we did it here. And that's also what created, those massive RSI divergences on all time frames from the daily and above. I mean, massive RSI divergence on the daily, on the weekly, on the monthly. That said a lot, right? So let me see if we have any questions. Oh, yeah, I had made some promises yesterday that we're going to have a look at exotics. Question, Steve, do you trade head and shoulder patterns, right? Yes, I do. Some sources inform us that this formation occurs only when it is confirmed by the volume. What do you think about it when you trade on a decentralized market like Forex? Okay, first of all, there are brokers that give you volume for FX as well. And if your broker is giving you volume, right? So if your broker is giving you volume, and your broker is a decent sized broker, statistically speaking, the volume that happens on your broker is a decent sample of what's happening in the general Forex market. So you can more or less put some faith in it. Now, I can tell you what theory says and what my experience says about volume. The theory says, and in technical books you're going to find that as well, is that usually you get more volume when you're trading in the direction of the trend. That is because obviously, one of the most misused phrases, like more buyers than sellers, is the biggest BS you've ever heard, because for every transaction you need a seller and a buyer. So sellers and buyers are always, an equal number. But what isn't always the case is how willing the buyers are to lever up or to bid up something in comparison to how willing the sellers are. So usually when you see moves in the direction of the trend, you expect to see more volume. So if you see a breakout in the direction of the trend and you see the volume increasing during the breakout, that means usually that you get more confirmation that, yep, you can trust this as a legitimate breakout. But experience shows you also that very often you see high volume on capitulation moves, like the one we saw in oil yesterday, right? So on occasion, very, very high volume might also indicate a market turn, okay? But other than that, you expect, as I said, more volume in the transactions that happen in the direction of the trend when a trend is well established, right? So that's what theory and practice say and show. Now, I had promised yesterday to have a look at the Nifty, so I'm going to do that. Nifty retesting. Yeah, this is what we drew last time, that we might get a rebound from there, but what's this horizontal support resistance area at 10,600? At the same time, as you see, the 38.2 is a little bit higher. So I think this is a level of interest. It's going to be very interesting to see if the market can make it above there or not. So, you know, if our friend that asked yesterday about the Nifty is here, I would say pay very close attention to what happens, you know, anywhere between here and this previous high at 10,700. So anywhere between where we are and 10,700, if we get rejected anywhere between there, I think it's an omen that there is more downside coming, perhaps towards 9,700. Okay. What's the DSI made of? The DSI is actually an index made by simply asking a sample of people, managers of money, etc., of what their opinion are. So they get asked a simple question, bullish or bearish, and you know they answer on that. So it's purely a sentiment index with involving people that are engaged in the markets actively. So that's what the DSI is. And the DSI, as the RSI, is a good indicator of the trend, but as the RSI and other indexes, when you see very extreme readings, they can very accurately pinpoint when you're getting close to a turn. Because as you very well know, when everybody's on one side of the boat, there's not much that can happen than, just getting something, tilting the balance and, capsizing the boat. So this is also how we use the DSI. So whenever you see readings below 10 or above 90, and especially at the very rare occasions, like now with crude, that you see readings below at or below 5, which is extremely rare, or above 95. By the way, I didn't mention that the DSI for natural gas is at 96. So at the same time that we have a DSI reading for crude at 4, we have a DSI reading for natural gas at 96. So keep that in mind. Anyhow, Coach, I just realized that I'm already 2 minutes in your interview. Is your guest here?
Yes, sir. Angie's here.
Okay. Perfect. So
great review, man. Great review. Great job every day by Steve Volge, crystallizing the board for me. So if it works for me, I'm pretty sure it works for everyone else watching, hearing. Hi, Angie. I'm going to make you the presenter now. Don't worry. You don't have to use your video cam, but you could still share your screen so we could talk about what's happening in the ags here. Really appreciate you returning to face. Hi, Angie.
Right. Hi, can you hear me?
Yeah, thank you so much for returning.
Yes, thanks for having me.
Yeah.
I think I'm showing the right screen. My quote board is what's pulled up right now, I believe, on that side.
That's right.
All
That's
right, just want to make sure. Otherwise, you're going to look at TweetDeck, and that's going to be.
I look at that too many hours a day, Angie. So I go to Twitter anonymous meetings. So Angie, last time we were together, one of the things that stood out to me was you talking about the Chinese, and this was way pre-tariff talk, stockpiling wheat in a big way. Are they still doing it, and are they doing it away from the U.S., like Australian wheat, or are they still in that Joseph, from the Bible, stockpiling wheat strategy?
Yeah, it's actually funny in an ironic sense that you would ask, simply because we did see an updated USDA number released last week that actually incorporated the Chinese National Statistics Board's summary of production. I'm going to go ahead and key up the USDA numbers from last week so you guys can take a look at what we saw from a change standpoint there. We actually saw them increase production estimates and increase stocks estimates for both wheat and corn. Corn was actually the big story. We saw corn levels actually double. And
double exports to China?
No, double Chinese supplies. So they basically
okay.
went and surprise found an additional 7 billion bushels. Yeah, 7 billion bushels of corn production. So what I'll do is I've got the wheat value or the wheat numbers pulled up here. 1 second.
Okay, so that's interesting. So
yeah,
they didn't let. Okay, go ahead, Angie.
Yeah, so here's this right here. If you look at, this is the world wheat supply and use outlined by the USDA released last week. And if you take a look at Chinese numbers right here, in October, their production number was around 127 million metric tons. So a metric ton of wheat's about 37 bushel. So just under 4.7 billion bushels of production. We saw that increase, that beginning stocks number increase from the USDA up pretty significantly. So that is a result of an increase in production as well as a holdover of supplies here over the last 10 years. So we hadn't had an update from the Chinese National Statistics Board in about a decade. So they came out and said, hey, our beginning stocks, what we started with before production took place this year, is up about 163 million bushels versus a year ago. And then we also saw an increase of overall production estimates by about 4.5 million metric tons. So about 165 million bushel increase on that side, which increased their overall holdings, if you look at the end here, versus what we were expecting, pretty significantly, up 7.5 million metric ton, or doing the math as we talk about 273 million bushel. Now, the one thing that is of most importance when it comes to Chinese wheat is the idea or the fact that a lot of it is of non-human consumption quality. It's really one of those things. There's been conversations about seeing issues with heavy metal toxicity, certain problems. Cadmium was a discussion for a while, where if you were to have wheat production on land that had maybe been perhaps used for industrial uses prior, you would see some of that spillover. We obviously know that there's a pollution issue there. So we saw that USDA number increase, relatively substantially overall, and only to see the import number come in, just slightly lower, 500,000 metric tons, so about 18 million bushels. So it is still something that's taking place.
What do you do with wheat that's not edible?
You try to feed it to animals, or
those poor guys.
Yeah, or you just pretend it's there and it matters when we all know it really doesn't. So, and that's the one thing that's why it's so important, is if you look at the overall global supply, you're looking at 266.71 million metric ton. But if you remove China from those numbers, you're down to 123 million. So China right now is accounting for a pretty substantial amount in the global supply and demand setup. So in theory, it's skewing the numbers. They're responsible for 54% of the world's holdings of wheat. And so at face value, you think to yourself, well, we're awash in wheat still, right? We still have plentiful wheat supplies. We don't know why anyone would be concerned about what's taking place in Russia, the Kazakhstan, Ukraine, your former Soviet Union areas that have really stepped up.
That was a breadbasket. What is going on there? We're currency people. So
yeah, you're seeing them return to the marketplace, pretty substantially. We actually have seen Russia become the world's largest exporter of wheat. If you look at the expectation,
wow.
Russia is going to have 35 million metric ton of exports versus the U.S. at just under 28 million. So there's a huge change there, and that's very important. Now, it's interesting to note that the Russian government has kind of come out and said that their wheat exports may be a bit lower than the USDA's estimates. There's been conversation there that Russian exports should be about 3 million metric ton lower than currently estimated by the USDA here. But that, obviously with China kind of stepping up what they're holding on to and other folks out there having supply, it'll be important to kind of pay attention to. But the wheat story is really one that's kind of just now developing, you could say. A lot of the wheat that went in this fall went into less than stellar conditions, at least in my neck of the woods, Michigan and Ontario. We plant winter wheat in the fall. So you tend to plant winter wheat last half September into October. Most guys like to have their wheat in the ground by Halloween in order to get a solid stand before it basically goes to sleep for the winter months. So we did see the anticipation was we were going to see a huge increase in wheat acres because of the price being $5.50 to $6 on the July 19 board at one point in time. But now we have seen, Mother Nature kind of said, hey, hold up on that idea because of condition issues, things like that in the Southern Plains. So if we see continued dryness as we're seeing right now in the former Soviet Union, specifically in some of those areas in Russia, the Ukraine, they've been a little dry this fall. There's been some issues in Argentina and Brazil. The idea is Brazil could actually increase their needed imports of wheat because of the trade issue and their subsequent increase in soybean exports and value of their soybean exports there for farmers. So there's a lot of interesting things. Australia's production was dropped this last month. The USDA is actually still 1 million to 2 million metric ton above where the Australian government is. So that was what was really interesting with the USDA taking China's numbers at face value, basically, is they don't tend to do that with anyone else. Was it, a peace offering of some sort or something of that nature? Perhaps, but it was interesting to see overall. So yes, they are still stockpiling wheat, but you could take a look at the corn numbers and say they're actually stockpiling those corn, that corn supply even more than they are on the wheat side of things.
Interesting, Angie. So after the tariffs went into effect, what group in the agricultural sector faced the most damage and challenge? Was it the soybean farmers that China went elsewhere to South America instead of buying from us after we developed that market for so many years?
Yeah, I mean, that was a major issue. So let's pull up, the world supply and use estimates. And I like to just take a look at what the USDA puts out because it gives us an accurate, could say non-biased opinion, depending on your opinion on the overall situation. But you can definitely see the issues or the problems that we're seeing when it comes to the trade spat, trade war, if you want to call it that, and a lack of resolution as we've worked our way into the new crop year. Now, China being prevalent in the market structure and value when it comes to soybeans. When I started in this business 13, 14 years ago, a bushel of soybeans used to go for about $5 to $6.
Right.
Through 2012 into 2013, we saw them go up to about 17.5 because of the increase in Chinese demand, that explosion. Obviously, the reduction in production that took place in 2012 because of the drought, things of that nature. So we've seen this really interesting supply side setup take place, primarily because of that increase in Chinese demand and overall demand as a whole. We've seen crush demand increase substantially. on the domestic side of the market as well. Just all kinds of interesting
all kinds of
sets up.
people enjoying tofu.
Yeah, tofu, right. Soybean oil, biodiesel obviously has stepped up. There's a need for some soy oil. We've seen some world production issues when it comes to palm oil. And so obviously soybean oil can step in as a relatively decent replacement on that side. But reality is looking at where we had started when it comes to May export estimates. So if you look back at the USDA's initial export estimates for soybeans versus May, when we weren't really in a heated trade war, you could say, or we hadn't necessarily seen China really move away from our supplies, to now, we've lost 400 million bushel or so of demand. Obviously, China has also lowered how much they're looking at from an import standpoint. We saw in this last go around here, the USDA lowered their import estimates from 94 million metric ton, to 90 million. Prior to this year, or at the start of this year, there was conversation that would be 100 million. So like I said, you're looking at 37 bushels in a metric ton. So you're talking that 370 million bushel reduction, which has led over into, just this phenomenally huge carry out estimate for soybeans at this point in time when it comes to what the U.S. is going to do. Now, we have seen record production. Our production numbers are up substantially. If you look at U.S. production in 2016-17 there versus now, it's an 11 million metric ton difference, or 400 million bushels. So that price, that demand, all of that has encouraged that increase in acres, and suddenly we ran into a big brick wall when it comes to that demand growth, and here we sit. So
if I was a soybean farmer, and farmers have so many challenges, I really am in awe of what they have to go through just to bring in a crop, what they need to hope for, and weather, etc. And then the government coming in and kind of taking a market away from them. I'd be a little discouraged about replanting. Is any of that going on?
Yeah, that is a conversation that we're seeing take place right now, across the countryside. The USDA released their baseline numbers, so that every November they'll come out with, basically kind of the bone structure that they're going to use to build their supply and demand estimate for the following year in November. So it gives us something to look at and kind of talk about as we move ahead. And we did see the USDA anticipate a 6 million acre decrease in planting this following spring due to the drop in prices, due to the issues that we're having, the plentiful supply across much of the countryside, specifically in the Western Corn Belt. We continue to hear about what's taking place with North Dakota, because of that Chinese market drying up. Their train rail demand, they used to be able to rail it into the Pacific Northwest and ship it out that way. We saw that, market virtually become non-existent this past harvest. So you're seeing a lot of those pictures of plentiful soybean supplies, soybean mountains, if you will. And the market structure is one that, if you take a look at the difference in November beans, which are getting ready to expire, they'll be done today at noon, 1 o'clock Eastern. But you take a look at the difference between July and November, and I mean, you're looking at a 50-cent carry situation. So in this side, we call it carry, though I think contango is much more fun of much more fun word to say. But so the market structure itself is telling you need to hold beans, put them in your garage if you need to, whatever. But you look at next year though, and that is one thing that has kind of come up. You look at November 19, and you're seeing them stay relatively solid at that $9.35 price, versus D's corn right now is trading about $4. So there are some farmers out there that are actually not in a big hurry to transition away from soybeans, simply because $9.35, $8.75 cash or so or if they see that continuation of solid carry in the market structure, there's 11 cents between the NOV 19 in January and a continued carry structure as well. So, you're looking at some opportunities. So some farmers are in a hurry to, I say, chicken in the yard it. That's what I call it. If you've ever been around a flock of chickens, if you throw corn in one sector of the yard, then they all run there. And if you throw corn in another direction, they all run there. Some farmers are really good at that when it comes to market prices. Oh, I'm going to where the pile of corn is now. Others have rotational constraints, disease issues, things like that. So you have to make sure that maybe if you planted corn this year in one field, it's soybeans next year, something like that. Bankers are also stepping in and saying that soybeans are cheaper to produce and a more steady crop. So soybeans tend to yield, if you're producing a 45, 50 bushel to the acre soybean crop this year, next year you're probably going to also be 45 to 50 bushel to the acre. So you can kind of count on revenue being a bit more steady, and the cost of planting soybeans is much cheaper, especially with the recent run-up that we've seen in chemical and fertilizer costs when it comes to putting corn in the ground. So there's a lot of variables still at play.
Yeah, how about lower energy prices? Has that been beneficial to the sector?
Yeah, not so far that we've seen. There are some issues that we've seen. Chemical production, a lot of our chemical imports, when I say chemicals, I'm talking herbicides, insecticides, they were imported from China. So it's been interesting to see. It's been kind of a two-part issue on that side. One part being that the Chinese government, obviously cracking down on pollution and things of that nature, has limited some of these production facilities that were in the market structure prior. And then obviously they're not in a hurry to ship us product to produce. If they are going to, it's going to be more expensive. So we've seen that take place. We've also seen some consolidation in the fertilizer end of things. So we have about 2 main suppliers. And obviously, a limited supply pool tends to lead to an increase in the cost of that product as they control that production. So we've seen, like right now for us, 28% and 32%, that's a nitrogen. Production of corn hinges upon nitrogen availability at a reasonably cheap level. Nitrogen can reflect the energy market structure as well. So a lot of times if the price of fertilizer goes up, suppliers may point to an increase in energy costs as a reason behind it. It does tend to lag a month or two, so it'll be interesting to see if next month this changes. But at this point in time, we are a retail supplier of nitrogen and fertilizer products, and we cannot even get our hands on to own 28 or 32% fertilizer for next spring. So that could also have some pretty large implications on what is going to take place when it comes to planting corn as well.
Speaking about implications, I haven't looked at a price chart in the grains for a long time. Has the strong dollar impacted the grain charts as much as it has, say, other commodity markets that have been under severe pressure, crude being a great example, but metals not doing well either? I'm wondering if the dollar has had impact on grain prices.
You could say it does from a day-to-day sort of standpoint. I'm just pulling up my easy go-to chart, not endorsing anything by any means, but
I hear you.
For me, just looking
at I'd like to see it.
looking at like DEES 18 wheat. So this is the 6-month view. Let's go out to a year. We did have some significant upside that took place the first part of August here that we saw. Now that was on the idea that weather, Russia, there was conversation that Russia was going to limit their exports, that their crop was much smaller than anticipated.
What a turnaround world. When I first broke into the business, the big deals were us selling wheat to Russia. Now it's the other way around. I mean,
the great grain robbery and all that fun stuff.
Yeah, I remember people who made millions at the CBOT on that, and that's a feat in itself with my age remembering that. So they look like wheat looks like it's at a pretty good support level down here. So does the corn and the beans look similar kind of peaking
Yep,
in the
it's-
summer and pulling back into the fall and winter.
which tends to be very seasonal in the grain structure itself. But yeah, they do look very, very similar. So if you go and look at a full chart on the D's corn, pull that up and look at a year time frame as well, and you will see that the high of the market structure took place actually this year very early. Typically, you would see this higher level take place about a month or two later, but we had a very good June when it came to production. Once we were able to get the crop planted, we got plentiful rainfall throughout the month of June, and then obviously the trade war fears began to really ramp up. So you did see that price, basically deconstruction take place as we worked our way into lows. Actually, very, very surprisingly, we almost thought we were going to maintain a contract low that was set in July. Typically, the 4th of July is when you would say the high of the market structure is supposed to come into play, not the low end.
Inverted, cycles inverted.
Yeah. So we're actually seeing a backward type cycle here. We did see a new low put in place there after the September report when the
There's
USDA
one more
came
coming. There's one more coming. I see a 3 drive formation. We have 2. It looks incomplete, but how about a quick look at the beans?
Quick look at the soybean chart will show you a very, very similar phase on that side. You're looking at the January board now. Obviously, like I said, the November is coming off. So Jan's going to become the lead month, and I imagine will fall into line with where the November board is going off at this point. So to click on that full chart, looking at a 1-year full chart, the soybean market shows a much more dramatic fall off. The high of the market was put into play, obviously around that same day, 5/29. And so, we did have a great June. So that led to this, but now we're basically sitting in this new type of channel.
Yeah, one more low.
It looks like our new range at this point, in my opinion.
906. Okay, so which of the 3 that we just looked at charts at has the most compelling fundamentals? Because you are, elite in your fundamental analysis. Which one has the biggest bull case going forward over the next year or so? And I know it's not a recommendation to buy wheat still.
No. No. But wheat is the main story, the main driver, I think, at this point. I think corn as a whole, we have a knowledge of that, what's taking place. Unless we were to see the administration do something that would be beneficial as a whole to the ethanol industry. We did see them say that we would introduce E15, but we're really fighting the API in that, the American Petroleum Institute. They want to sue for that. They're not happy to,
kill all the lawyers. Kill all the lawyers.
Get rid of them, because they do not want to give up that 5% increase. That 5% of demand, they definitely do not want to give up. So we've seen the administration kind of gut the renewable fuels market to a certain extent. So corn had a very compelling story. It still could have a very compelling story. The major changes in China last week kind of put that fire out, at least in my belly, for a minute. Now everyone will say that China doesn't matter, but if China was a lot closer to running out of supplies, like they were, before the change in numbers here a week ago, I did say, and I'll be published as saying that, I thought a trade war resolution would be more beneficial to corn and ethanol, with China wanting to increase their ethanol blends and things of that nature. Now the jury's out on that a little bit for me, at least at this point in time. But wheat overall, like I said, you remove China and you're down to a relatively tight stocks to use ratio as a whole. We run into any further production issues, which right now we have an El Nino weather pattern that's starting to develop, which can cause some issues for production here in the U.S. and in South America as well. And we want to watch.
What else makes it strong, Angie? It was a strong story when we last talked.
Yeah.
And that was 6 months ago or so. I'm not exactly sure. And we've gone through tariffs, tariffs being enacted, and it's still the best story. And it has the best looking chart of the 3. So great interview, Angie.
Thank you for having me.
You want to show your website and how people could follow your work? Because I do believe once we get $1 high in here, that all
Mhm.
commodities will, the pressure will be taken off, and just on a nominal basis. And
Yeah.
you know what I mean?
Yeah. Oh, and I agree. Commodities tend to benefit from inflation, especially on the grain side. And so if we were to see some inflationary pressures start to develop, which has been the conversation, obviously, in 2010, we really didn't have a fundamental story. But if you look back at the charts, you'll see that it became a good buy out of the idea that we were going to see inflationary pressure after that, significant increase in investments in our economy. But our website, citizenselevator.com, if you're not in the ag market sector, it might not be that interesting to you, but we do have some market commentary that goes over. And then if you pull up here, you can see I put a weekly summary together every week. So you can go back through and take a look at what I'm talking about each week. I also post it on Twitter. You can follow me there at Goddess of Grain if you're interested.
What I really love about grains, Angie, is the Fed can tighten all they want. It's not going to increase the grain supply.
Yeah.
Okay.
It's definitely not something we can. We can't shut a pipeline. You can't decide on a Monday you're going to shut off production or hide it. I mean, it's been something farmers have talked about for years and controlling supply. But the more you produce as a farmer, the more revenue you have, and that's the driving factor as a whole.
Yeah, and even QE, if there's a shortage of grains, the Fed can't print wheat, corn, or beans.
Nope.
So that's why I bring in. I love the sector. I think they're very pure, great trading technical markets, and you need to have a good fundamental background. So you're my go-to person, my go-to lady, woman.
I appreciate that. Yeah.
In grains, and thank you so much for taking the time out to be with me and our community, Angie. I appreciate it.
Yeah. Thank you for having me. I always enjoy it.
Yeah, it was great. So I wish you and your family happy holidays, and that you have a bumper crop for the rest of the year in your life, and all the people you love.
Well, thank you. You too.
Thank you, Angie. All right, everyone, that's Angie Setzer. That's a wrap for us today, and have a great day. See you in the members chat, and remember, don't just count your pips, count your blessings. I have David Brady with us tomorrow. You guys love him. So good hunting the rest of the day. Adios. Thank you, Angie.